I'm sure people don't understand, it's law. It's not necessarily you and in your business making these decisions. This is at a federal level.
It's a federal level. It's a federal level, and obviously it's not nothing that we have control over. But what we have control over, Jody, is take the responsibility to do proper planning.
Mm-hmm.
That's our responsibility as a business owner, me as a CPA for my own firm, me as a CPA for my law firm clients. It's our responsibility to sit down with our clients and really go through what's happening and what changes are coming to make proper planning to avoid surprises. Because, yes, maybe qualified business income deduction will go away, but I'm pretty positive something else will come in. Something else will come that will replace it, or at least replace it close to the benefit that you were getting from the qualified business income deduction. So, but if you don't do the proper planning and you lose out on this deduction and you're not aware of the next one coming up, then you're in really deep trouble.
Mm-hmm. We like the
So
good surprises, not the bad ones.
we like the good ones. We like the good ones. Bonus depreciation is expiring soon. That's in place for 2026 also. If you remember, you could buy a piece of furniture or equipment for your business, or even a car if you had an average weight exceeding 6,000 pounds, and deduct the entire amount the year you purchased it. Typically, the general rule says that you have to deduct it over the term of the life of the equipment or the furniture that you purchased. Let's say a car over 5 years, furniture over 3 years or 5 years. But this bonus depreciation was allowing us to take the deduction the year we purchased it, which was a massive help to reduce your income in a high income year. That 100% has gradually been reducing. We're down to 40% this year in 2025. It's going down to 20% in 2026, and it's thereafter phasing out. But the Section 179 deduction is still in place, which is very similar to the bonus depreciation. But the major difference between the bonus depreciation and the Section 179 depreciation is that the Section 179 depreciation, which is not going away, it's permanent as of right now, does not allow you to deduct your expense below zero. What does that mean? If you have, let's say, $50,000 profit in your law firm and you buy a car, business related car, worth 100,000, and you deducted, assuming it was 100%, I'm simplifying this example right now, and you take Section 179 depreciation on that car with 100,000, you can only use 50,000 because you only have 50,000 in income before the Section 179 deduction. The remaining amount have to be carried over. The bonus depreciation did not have that limitation. The bonus depreciation allowed you to use the entire amount and even reduce your income below zero, which would give you negative business income, which you could deduct against your other W-2 income or other passive income. So bonus depreciation was a little bit more aggressive and a little bit more lucrative for smaller businesses and lower income businesses. But Section 179 is not too bad either. One last thing real quick. I know a lot of law firms do that. That's why I like to talk about it. Law firms have employees, team members that work late or work over, and similar to us, CPA firms, we buy lunch and dinners for our team members just for their convenience so they can, have energy to keep on working. That deduction has already gone down to 50%. So if you spend $100, you can only deduct 50% of that. And that's expiring. And going forward, you will not even be able to deduct the employer meal provided lunches or dinners. So maybe companies and firms will stop offering their employees
I was going to say,
dinners now.
Emil, your team's not going to be very happy if you stop providing lunch and dinner
Yeah, we'll
and
we'll
those
start.
hard
We'll
birthdays.
we'll keep on providing it, whether we get a deduction or not. But I know a bunch of firms that will
Yeah.
probably, if not stop it, they will probably limit it.
Well, you got to keep your employees happy, right? That's such a perk. But man, if that's going to continue to go down, um, it's not good. It's not
It's
good.
not good.
It's not a responsible move financially.
Yeah, and as we heard, this is not the only disadvantage with the provisions expiring. There's other provisions that are expiring that are even worse than this. But I really hope that the administration, the new administration, President Trump will really look into this and help small business owners, because it's needed. We need some kind of boost in our small business world.
Well, it's the American dream and you're living it. So I know that you want to encourage other people to be able to live it too and support them in that. So, Emil, thank you so much. Is there anything that we did not talk about that you wanted to add in?
So about tax planning and tax kind of with the new administration, I think that that's very good. We will obviously come back as soon as we have more information from what's happening, where we're going, any changes, we'll come back with an update. I wanted to go back a little bit about law firms' cash flow management.
Okay.
Uh, Totally unrelated to the what we just discussed, but law firms in general, I'm just talking about general, and we work only with solo and small law firms. Our biggest law firm is probably 150 employee law firm. The smallest one is a solo guy. So anywhere in between, which are still considered as a small law firms. And the reason we really don't work with those huge law firms is because they typically have their own CFOs and in-house accountants, and they only need someone to prepare a return for them. And that's not us. We're not a firm just to prepare a tax return. We work with our clients throughout the year. We want to be able to help them, provide value, do proper proactive tax planning. And in order to do that, we need reliable data, which comes from the bookkeeping. So we do the bookkeeping, make sure the law firms are in compliance with state bar regulations with their trust accounting. So that's why we really don't work with the large firms. The small ones, and big issue that we see with small firms is their cash flow management. And the number one issue with the cash flow management for small and solo law firms is delays in billing. They are not billing their clients on timely basis. That's the number one issue that we see across the board. Any kind of really practice area. Except for contingency cases where they don't bill, obviously. Contingency cases, you work until the case is over and you get a settlement from the insurance company or typically from an insurance company. But an hourly billing or even a flat fee billing firm's biggest issue is delays in billing. And how can you improve that? As a law firm, first of all, let's talk about why it's delayed. There's a study here that Clio Practice Management Software did. They do this study every year. It's called the Clio Trend Report, and it comes out every year, sometimes in September, October, right after their Clio Con. But over and over, we see the same issue that lawyers, solo and small law firms, law firm partners are typically only billing 2.3 hours of an 8-hour day. What does that mean? You're working 8 hours, but you're only billing 2.3 hours of your day.
Wow.
And of that 2.3 hours that you're billing, you're only collecting 1.8 hours of the day. That's massive. So what does that mean? We're missing out. They're not billing over 6, or they're not collecting over 6 hours a day on their from their billable time. Let's go really conservative. And charges lawyers hourly rate, let's say $350. I haven't seen anyone charging less than $350, and you're only billing 2 hours a day and missing out 6 hours. I'm gonna pull it out on my calculator because I am an accountant, but not a calculator. So
You love a calculator.
I love the calculator. 6 hours a day is what we're missing, and that's 300 at the $350 hourly rate. That's $2,100 that you're missing out every single day because you're busy with administration and any other thing that except for handling your client's work, right?
Right.
2100. Let's say, okay, let's be conservative. Let's say 20% of that admin time is actually what you need to do, because you need to have systems, you need to control it, and you make sure all that. So, but 80% of that 6 hours is just waste that you could have someone else do it for you.
Mm-hmm.
And let's say 80% of that, you're down to $1,680 per day. Let's say we work 5 days a week. That's $8,400 a week. And let's say we take vacations and holiday and all that. We only work 45 weeks out of a year. That is $378,000 of waste
Wow.
per lawyer.
So what do you advise or encourage people to do to keep better track of their billable hours?
So it's not about keeping track, it's that they doing things that they should not be doing.
Gotcha.
Lawyers are working on tasks that could be easily delegated to administration, admin work, the receptionist, the bookkeeper, the marketing team, to IT. And if you do that, I can guarantee you that the cost of hiring someone else to do what you are doing during those 6 hours of the day, it's going to be a fraction of the $378,000. I can guarantee you that.
Yeah, that makes
And
sense. So like your advice would be hire a marketing firm or a marketing person, and then you're not doing the marketing, you're still working for your clients.
exactly.
Yeah.
You're doing the billable work. If that's what you want to do, like most of the lawyers are in it to provide law firm services. They're,
Right.
they're not in it to do marketing. They're not in it they didn't start their firm to do bookkeeping. They didn't start their firm to do billing. They didn't start their firm to start calling their clients and asking them to pay them. They didn't start their firm to answer phone calls. They didn't start their firm to handle their IT department. They didn't
Yeah.
do all. That's I haven't come across a lawyer that started a firm to do all of those things.
No, they need a staff.
They need they need to, I think they need to staff that will increase their cash flow significantly. But also another issue, that's the biggest issue, you're missing out on billable time.
Yeah.
So your cash flow is reducing, your profitability is reducing significantly. Another major issue is that when they do all of this work themselves, they're so busy with everything. They're wearing millions of hats. Billing company, they're they're the biller, they're the bookkeeper, they're their IT department. So they don't have time. So they push their billing not only 1 month, but 2, 3, 4 months until they bill their clients. And what issues do we face with that? First of all, when you bill your client 4 months later after you provide the services, they forgot about the value you provided them. And all of a sudden, they get a $15,000, $10,000, $12,000 bill from you. Get the hell out of here. What is this? What is this about? And the chances for you to collect on that, or at least collect the full amount, is going down significantly versus if you would bill them timely right after you provide that service. So cash flow management 101, do your billing as soon as possible after the service is provided. We do this service for our clients, and we do billing based on by twice a month or monthly basis, depending on the size of the firm and depending on the practice area. But a lot of times we do their billing twice a month, and we follow up with the bills and make sure the clients get paid, because you send out the bill, unless someone bugs them. A lot of times these companies, lawyers, clients, which are typically companies, are just ignoring them until someone starts bugging them, and of course they will pay it.
Yeah.
So cash flow 101, send your invoices as soon as your service is provided, because you will increase the chances to collect, and collect quickly, a lot faster. Cash flow 102, maybe not 102, maybe 103 or 104, is offer your clients to pay by electronically.
Yeah.
Don't wait for them to send you a check. That's slowing down your collection significantly. It's not only the time it takes for them to cut the checks, the mailing time. It's just actually they wait. If you're gonna cut the check, it might take you weeks or months before they cut that check. But if you send them an invoice with a link to electronically pay you, it's right there. And even better, in my opinion, is when you send them a link via email, but also via text. Nowadays, a lot of us are using our phone more than emails. So if I get a text with the invoice, I know I need to pay it. I just click on it, boom, it's paid. And that's another study that Clio did in their 2024 trend report, where I don't have the percentage increase, but they increased the speed of collection significantly by offering electronic payments.
Well, and business is about relationships. And so what better way to continue that relationship than keep it current? Keep it current. Keep it current.
100%. Exactly.
Bill them.
I think that's a good lesson. Keep it current. I didn't think about that, but that's a good way to put it. Keep it current.
Yeah.
Why wait? Do it right now. Do it right. And
Then after they pay the bill, you can say, hey, thanks for your payment. Let's go to lunch.
I'll buy you lunch.
Exactly. The relationship stays good. It stays positive. It stays fresh. So yeah, that's
100%.
good tactics. Good tactics, Emil.
So I wanted to share the cash flow management kind of tips, because it's very easy to do, but you just got to do it. And it requires the right team to do it timely, because I understand you're a busy lawyer. You need to do everything yourself, or you have a paralegal who does everything else for you also, but it's not enough. You hire the right people. You can increase your cash flow and not least your profitability significantly by doing it.
And you, as a as a CPA firm for lawyers, you offer those services as well. Is that right?
Yes. So we are not a traditional CPA firm where we only do tax and accounting work. We take over the back office for our law firms. We want to be there and provide value to help them grow their firm, more than just prepare a tax return or just give them a piece of paper with their financial statements on it. Yes, we do that. That's part of a product. That's compliance work. But that's not the fun part. The fun part is actually be there, be a partner with our clients. We're partner in a good way to put it is we're partnering up with our client without sharing the profit.
Right. And then they can focus on those relationships, building those relationships and getting new clients.
That's why they got into opening up their own firm. Otherwise, they could stay at the firm and work there 8 hours and just go home and not worry about anything else, right?
Right. Well, Emil, it was awesome to talk to you today. I'm so glad to get all this information. I'm learning so much, and I appreciate that. So,
My pleasure. Thank you so much, Jodie.
We'll talk again next week.
Talk to you soon.